I don't think that's where we're going this morning, but nonetheless, Tuesday, October the 18th, the Daily Energy Markets podcast. We see this morning that Brent is once again picking its head up a little bit. The drop that we saw last week has been sort of stalled, if you like. The oil price, the Brent, rose from low 80s once the Saudi oil minister started talking in late August, and progressively recovered back up to the high 90s when OPEC made its decision to cut output quotas at the beginning of October, on October the 5th. And nearly since that moment, prices started to fall all last week, but now this week have sort of signaled a recovery, or at least the stalled any further declines. Let's kick off this morning in Singapore to get a sense of the view from our regular commentator there, Vandana Hari, to get a sense of where your feeling is. The news overnight that the US would be releasing more from SPR, whether that has been enough. It doesn't seem to have made any dent on the markets. Where does further SPR releases feature, do you think, in the market's consideration, Vandana?
Hi, good afternoon, Sean. So I sense a bit of a holding pattern in crude prices. As you were just mentioning, we saw quite a run up in the OPEC plus decision week. Brent stacked on almost $10, and the week after it lost about $6. It gave up about $6 of that. And now I think it's a bit of a holding pattern, because what I sense is that the market is waiting for more cues on what direction to take. Now, of course, one of those will or could come from Washington, because there's been a lot of noise, a lot of political dust kicked up. We saw last week a lot of anger. But the question for the oil market really is, if you put aside this political rhetoric, what exactly is the US going to do? And, what steps could it take that actually alters the refined product or crude supply demand balances globally? So one is, of course, releasing the SPR. As you just mentioned, I saw that headline as well. I think we'll await confirmation on that. But I believe it's Bloomberg saying another 10 to 15 million barrels could be released from the SPR. Look, I think there'll be a drop in the bucket. The US pledged to release 180 million barrels over 6 months, most of which it has already released. That's almost 1 million barrels per day. And now it is talking of another 10 to 15. What it tells me is it's probably very, very politically motivated. They're probably going to try and bide their time until the midterms. And which they should raise the question mark for Americans, like what happens after that? How many tools does the administration have left in its box to keep prices low? The other idea being talked about is restricting or even banning refined product exports. I just see it completely impractical. They certainly can't leave the Europeans in the lurch, especially now that that Europe is looking for more US product to replace Russian barrels.
Let's bring in Andy Levin, COO of Sahara Energy Resources. Andy, it looks like the markets at the moment this week, I mean, if it's the next crisis, or it was 2 crises ago, but has come back, and that is diesel scarcity. It seems to be everywhere all of a sudden, a very big stress point, I suppose, going into the winter as well, additionally with the sort of crossover demand into burning of liquids. But your thoughts on where the crisis, the crunch of diesel looks at the moment?
Well, I think people are, to a certain extent, unclear of where the market should be going. As Vandana said, everybody's looking for a pointer as to what direction it could be. And I think what you can see as we start to head into the winter, as you said, fuels are going to change. People are going to look at where the supply moves. And therefore, there is an element of trying to be ahead of the curve and second guess where the market's going. Diesel has continued to be an issue, especially in Europe, because of the reduction in supply from Russia, and that's not going to go away anytime soon. As Vandana also said, I think any additional political intervention that will change how, or will try to change how the market functions, is going to do nothing but add uncertainty, volatility, and probably push prices up again.
Vandana, just picking up on your release today from Vanda Insights, looking at the big news of the week, of course, in Asia is the Chinese Communist Party Congress and the commentary from there, most notably the speech of President Xi Jinping's on Sunday. What was your main takeaways and what should we be paying attention to?
Yeah, so clearly he covered a range of issues in his 2-hour speech, but let's focus on what I think matters for the energy markets or the oil and gas markets. On a very high level, of course, I see it as consolidation with a capital C. So Xi is consolidating his own power, of course, and he is also consolidating the Communist Party's power, as a sort of a higher power, if you will, than the government and the prime minister. So it seems that it will be just more of the same policies that he has laid out. The other one, I think that especially the energy markets, commodity markets were looking very carefully for, and again, no surprises there, is that the strict COVID policies will remain in place. I thought it was interesting that he called it the people's war to stop the spread of the virus. So that sort of puts the onus on the ownership of this policy on the public, which I think personally is a bit ironic, because from what I hear, anything that the public what the public wants is anything but continued zero COVID. I think, again, on a high level, it looks like China is learning to live with slow economic growth. A bit of a surprise yesterday was that the government delayed the release of the Q3 GDP data. Now, we know Q2 was 0.4%. Q3 analysts are expecting will be anywhere 3.3, 3.4% growth. But generally, what I see is economy is moving into a more moderate pace of growth. And I think lastly, also on the energy front, I think it was interesting that he talked about balancing energy, the transition to green energy with energy security and supply stability. And he also wants China to have a bigger voice on the international stage. And I was just talking to Andy about COP27. I think it'll be more interesting to watch, especially countries like China, India, if they have a greater voice around these discussions, international discussions on decarbonization. Because, this part of the world, and again, we discussed this in your energy forum in Fujairah as well, stability, security, energy affordability, accessibility, all these are major considerations.
Andy, I want to just talk a little bit about the oil price cap, the infamous G7 oil price cap, which originated from Janet Yellen in the United States and is stumbling to life. It seemed to be, in some ways, central to OPEC Plus decision to sort of make this big, at least quota cut, much bigger than expected, this sort of face-off around the control of price. And now we have the news overnight that India looks unlikely to be a subscriber. Your general thoughts of the oil price cap?
Good luck.
Right.
That's it, right? I mean, come on. It's like on one side of the picture, you've got Russia basically saying, so if somebody wants to cap our oil price, we won't sell to them. So we take products off the market, or it just makes no sense at all. I don't understand how you can make it work unless you've got somebody who has absolutely no other option And then Russia's just going to turn around and say, well, I know you've got no other option, but sorry, if you're going to cap the price you're going to pay to me, I'm not going to sell it to you. How does it work? I mean, it's just like, it's pure in my personal opinion, it is pure politics. And
what's the
nothing
politics?
to do with it. Sorry?
I said, what are the politics? I mean, my understanding is the politics here are the US trying to dull the impact of the European Union decision to boycott Russian oil from December the 5th. This is a way of letting the Russian oil continue to flow.
Yeah, but it takes two parties to agree to the price, right? So unless Russia's magically go, oh yeah, of course I'll let you cut my price, not pay me as much, why would they ever do that, right? Unless there is nowhere else they can put the oil, but in reality, it is probably better for Russia to take that oil off the market, prices go up as a consequence. They still sell to those countries that aren't agreeing to the price cap, and they still get what they want, which is cash. So it's, to me, the politics of it are, we don't want to be seen to be putting money into the pockets of the Russian administration. However, we need their oil, so what we'll do is we'll cap the price, the amount of money we'll give them. So to the uninformed individual in the street, it sounds like they're doing something very positive. In reality, it won't actually achieve anything, I don't believe.
Vandana, your thoughts also, again, with India, and obviously China would never be a subscriber to this, but now India, which is sort of dancing between the Western alliance and independence, doesn't participate. It's sort of dead on arrival, isn't it?
Sean, I'm not sure I would agree with the characterization of dancing between the two sides. I think India has been politically neutral. And look, the single biggest reason, and again, I'll use the word ironic, the single biggest reason India has no reason to join, should not join such an alliance, has been provided by the US administration themselves. Time and again, they have told us that even if this doesn't turn out to be a broad alliance, then the US or the West will still win, because the countries who are not officially participating will say, well, this is the cap, and why should we pay more than the cap? So they'll still have the bargaining power, right? I mean, therein you've given a good reason for countries not to join. And let us not forget that, okay, we can say that perhaps it's time to call Putin's bluff when he says that he will not sell to countries, oil or gas, to countries that are trying to impose a cap. But then why should India take that risk? That Putin says that, well, you join the price cap, you know, we'll sell to China, Sri Lanka, Indonesia or Malaysia, but we won't sell to you. So, it just absolutely makes no sense for India to join this kind of an alliance. I'm not surprised at all. Aside from the fact, all the points that Andy has mentioned, that I think it's doomed to fail. Why would you want to be a part of it?
Can I just add, I think India actually took a very pragmatic approach, whereby they said, look, obviously we recognize that our refiners can get cheap oil. However, what we're going to do is we're not going to allow them to make incredible profits on the back of that. We want that extra money to stay in India, so that India benefits as a country rather than the kind of private institutions.
Yeah, it's sort of another extraordinary stumble down the sanctions rabbit hole that just doesn't really deliver. Andy, let's just talk a little bit about this situation in the European story of LNG carriers queuing up all on the seas around Europe trying to offload. There's apparently up to 30 something cargoes waiting to offload. Europeans' capacity to absorb this scale of LNG is clearly not there.
No, it's not. But I think it would be interesting, and I don't have the detail that sits behind it, but it would be interesting to know how much of that are kind of speculative plays in terms of positioning vessels and products in a location for future demand. Because if you look at some of the commentary, basically, nobody that's buying any kind of product is purposefully going to have vessels sitting there doing nothing. And it's not as if there's a problem with the infrastructure. The infrastructure is actually working properly. It's just at capacity. So one has to presume a lot of it is just there because there is an opportunity that it will be the only place that gas can come from. So as the gas gets drawn down, somebody's going to have to replace it. And if you've got a vessel sitting there, you're likely to get the first call.
So it's like a contango storage arbitrage opportunity.
Exactly.
Vanda, what does this mean for Asia this winter? We've talked about the fact that Europe sneezes, Asia could get a cold or pneumonia in the context of LNG and gas supply, because the biggest buyer pays, wins. What's the impact for Asia this winter as we see literally 30 plus cargoes sitting on the waters off coast of Europe?
Yeah, that's a very important point, Sean. So this is clearly Europe's headache, but it's being very, very closely watched out of Asia as well, especially the more price-sensitive countries in this part of the world. So we should put aside Japan and South Korea, though, they have also felt the pain through this summer of, $60 MMBTU JKM prices for spot LNG, essentially. There isn't much that Asia can do other than what it has already done partly is turn more towards coal. But just pray alongside Europe that the winter doesn't happen to be too bad. I think one of the relief factors for Asia and just the world of LNG and the world of spot LNG importers has been that Chinese demand has been quite subdued. Now, I saw a headline recently that China has forbidden the re-export of LNG. So, we knew that earlier this summer, Chinese companies pocketed a bit of premium by selling the LNG that was not wanted at home to Europe and to some of the other buyers across the world. But that's not going to happen. So basically, Asian consumers, Asian importers will have to just buckle down. And
it's probably the best news that Europe has heard in a while was the speech by President Xi on Sunday. The fact that he was going to remain in a COVID lockdown, because if he was to reopen, China's demand on LNG and everything else would probably grow, and Europe would be under much greater duress.
Yeah, absolutely. And I think this is going to be, in general, the sort of roadmap that Xi Jinping is laying out, which is, steady as she goes, quality of economic growth rather than pace of economic growth, which in turn means, more subdued pace of Chinese demand growth for commodities and certainly for energy commodities. I think that's good news for globally, generally, and certainly in Asia. India as well. If there's less competition for the marginal barrel of oil, marginal ton of LNG from China, that's going to offer much needed relief in this environment of high inflation.
Let's go to the survey question and just get a sense of the room onto where this SPR release, if indeed it has acted, I think, to a certain extent through the year to cap or at least calm prices down, sort of more below 100 than above 100, because it was quite a significant amount of oil SPR got out to the market, and general reporting has been that it's moved rather efficiently and quickly. But if the US, with the few tools that it has to counter the OPEC move last week, a further release from SPR through Q4, would that be enough to push Brent below 90? Yes or no? Andy, I wanted to get some insights from you. Obviously, you've just returned from Africa. You could give us what is the view from there? Obviously, we hear it through our podcast quite often from the Asia position, the Europe position. Even we have commentators in South America, but not often do we get the sub-Saharan African position. So perhaps you could give us a view of where they're looking at the world at the moment from an energy perspective.
So I think Vandana and I were talking about that before we started. I think from an African perspective, there is a very different view of the world. Obviously, they're concerned about prices just because they have to pay them. But essentially, it would be, I think, in kind of three ways. Number one is the energy transition for them is not the same as the rest of the world, certainly not for the developing world. You've got 50% of the population in Africa doesn't have clean fuel for cooking. So talking to them about switching to gas is like light years away from these people. The second is there is an enormous amount of resource in terms of general energy resources in Africa, which is not being used. So there are resources like sun, wind, which are very, very underutilized because of the breakages and the gaps in terms of all the politics around Africa. And then you look at the product side of things, and pretty much everybody is importing. If you look at Nigeria, Nigeria's largest producer of oil and gas in sub-Saharan Africa, and they import the vast majority of their products. If you look at South Africa, the one that's supposedly the most robust, the most developed, very old refineries, they have to import all their oil, and the refineries are being closed down. So they're moving to a place where product is being imported. The whole of the east coast of Africa, it's all imported products. So the market is very, very different if you're sitting in Africa. It's how do I get access to fuels and how do I get them to the customer? And it's very, very little about actually what does this move to a low carbon environment mean really, because we need energy, end of story. I mean,
so the demand position, you think, remains robust if the infrastructure was there to connect to the consumer?
So the demand is definitely there because you just have to go to the airports. Half the lights aren't on. There's no air conditioning. It's hot inside the airports. Doesn't matter whether you're in domestic or international, because they're saving power. Cape Town was in load shedding. It's been in load shedding for several months because they don't have the capacity, but they have the demand for electricity. And I think you wherever you look, there is demand that is not being fulfilled just because, partly because of infrastructure. So South Africa's issue is they just don't have enough generation capacity. And so when one goes down, they don't have enough to supply, so they have to load shed. So that fundamental demand is there. Creating the supply is the issue, which is in part infrastructure.
And Vanda, the Chinese, of course, have been very actively engaged in Africa and the development of that infrastructure and power and other areas. But it looks now in recent times the Chinese are sort of dropping a little bit back from that very proactive, engaged posture of very heavy lending. The Belt Road Initiative, if you like, could have rammed right through and into Africa, but now looks a little bit restrained. Your thoughts on where China goes vis-a-vis that scale of investment?
So again, I see China as increasingly becoming more inward looking. Of course, they call it self-reliance as well. And I think that's pretty much two sides of the same coin. De-emphasizing oil and gas development, funding of oil and gas development, or investing more into countries in Africa or Latin America that have oil and gas reserves, not surprisingly, does not have to be a major focus for China now. So, if it's moving away from a growth of 8 and 9% GDP, 5 to 6% year-on-year rise in oil consumption, to perhaps, let's call it 3 to 4%, wherever you want to put Chinese GDP going forward, and maybe 1 to 2% at the best growth in oil demand. They don't really need to put their money into those sort of projects. And, again, going by what Xi Jinping, the roadmap he's laying out, he would probably want to put that investment at home. I think another sort of pivot that I see from China also is that we may see it concentrating more on countries and projects that are into mining of materials for batteries, for instance, something that will support Chinese move towards, electric vehicles, for instance. So, I wouldn't be very surprised to see the country sort of becoming more insular, more inward looking, and pulling back. And of course, it's been a huge project, billions of dollars spent. So we're not going to see a major shift overnight. It will be gradual, but certainly I don't see it expanding, definitely in contraction mode as far as Belt and Road is concerned.
Yeah, we have a story actually in the digest today, which is China's next big trade is nationalism, in the sense that President Xi Jinping, it seems to be willing, as he has been in recent years, continue in his third term to compromise on growth for the consolidation of power and control and nationalist posture at home, which may, one thinks, set him up for that big move towards Taiwan, which coming out of his speech the other day felt like that was closer rather than further away. Let's give Andy the last word this morning with the result of the survey question. No is the answer. Andy, as we sort of stumble around, as we've talked in our half hour this morning, the oil price cap, the SPR release, these different attempts on the consumer side to sort of curtail the oil price. Is there anything else in their toolbox that they could do? We didn't talk about this idea that NOPEC, this legislation, could progress through the houses of Congress in the US that would subject the OPEC countries to some serious potential legal jeopardy. But is there anything else, do you think, in the sort of reaction that President Biden has promised?
Drill, baby, drill.
Drill, baby, drill.
I mean, the reality
your former employers just don't seem to want to drill. I mean, as I said yesterday, the shock of the year is the fact that at $100 average this year, U.S. production is still 1 million more below pre-pandemic levels.
And I think that, unfortunately, that's the challenge. You're dealing with a short-term issue in terms of politics. Yet, actually, when you invest in an oil company, when you invest in a well, you're looking at multiple years of payback. So they are diametrically opposed. The reality is the wind is against lower oil prices at the moment. The things that could happen to push oil price down are not within, certainly, the US's control. If China doesn't give the market some kind of certainty that they are going to start building back and growing, the concern will be that that will push the world into a global recession. If that happens, demand is going to start dropping and prices will go down. But I'm not sure that's the outcome that Biden's really looking for, because actually with lower oil prices comes a lot more pain for everybody.
Well, it is that extraordinary sort of catch-22 that we're already in a crunch on capex for future supply, that we could be going into another window that resembled the COVID period and the period before that, where capex collapsed. So you're setting up for another big spike not too far away. We'll have to leave it there. Thank you so much, Andy Lavin and Vandana Hari, for your insights this morning. Oil markets, as we said at the top, are trading a little bit higher today, back firmly above $92 on Brent, and holding in that $90 floor, which general market analysis was the target of OPEC Plus when it made its decision on October 5th. We want a floor at 90, and they seem to have got it. So at least for now, let's see what happens through the course of the week. Thank you very much. Here every morning, 10:30 UAE time. All the best.
Thank you.